So context makes a big difference. You may take this onto a slightly more short time frame situation, and you've got gold. Now gold context really is, overall, we are in a downtrend. Very, very much consolidated here. So you can start taking it onto a slightly shorter time frame. And what we've got here is we've got a bit of a wedge built up in gold. So we had double inside day. Volume very, very low on these. So what you need to see is you need to see volume picking up today if it's going to break. What you don't want to see is a low volume break. That's likely to be one that fails. But what you've got here, from a context point of view, if this is to break to the downside, and again, like cable, this is probably going to be more significant. You've also got it from the other side of the wedge. So wedges, triangles generally seem to break better when it's traded from one side and trades through, rather than trade say down, trade sideways here and then drifts through. The fact that it's gone to the other side, got people probably to try and buy it for the break, fails, then the move through is more significant. So it's that context that adds into it. That's what just gives you these little bits of clue. Once it gets up there and fails at that trend, you could well be trying to take the move from the trend as well and trying to sell it preemptively. And this is where I was saying, I don't want to get into how exactly everyone executes those. It's something that I've talked about previous, something I will talk about on mentor sessions in the future. But it's about sort of what's leading up to it and what makes the break more or less significant. I would suggest with gold, similar to cable today, the break to the downside could well be more significant. We haven't, however, broken any major levels, and that's perhaps the one little difference with the pound and with gold at the moment. That yes, we have seen quite a decent drop, but it's not sort of breaking really major levels. Now, in terms of once the move is going, one, you got context being very important, but this is something that has come out as a great example in the pound today, is use reasons to keep you in these trades. If this is going to expand range, if this is going to keep the move going, you're likely to see this trend type looking profile whereby you get value shifts or volume starts to accumulate at lower and lower prices. Now, this was actually one in the Bund from Monday last week. And what we got here was actually the inside day break to the upside to start with. So this fails to the upside. So that's one, add into the context. But two, just like that gold example I just showed you, comes straight from the top of the wedge. That then makes that breakdown more significant. And as you break the inside day to the other side, break the next significant lows as well, or the next daily lows, this is where the move then picks up pace. But what happens is each time it breaks, you get this low volume and then an accumulation of volume below. Low volume at 88, which is down here, and then accumulation below. And what's happening there is every time it bounces, the sellers keep coming back in. So this is what can help you on these moves. These larger moves and larger breaks of certain areas don't always come with a sudden fast drop that becomes very explosive to the downside. Typically, if you see that, it's more likely people getting out and creates a slightly less sustainable move. The moves that then create consistent fall are these slower moves where you get this consistent dropping down in volume on the profile. So use that to help you out, but also use that to plan forward as well. Next time you see a setup like this, you might be starting to think, right, well, how's it going to play out? That way you stay in these. These are often the hardest moves to stay in because they're quite slow. They don't give you anything explosive. They don't really make you feel like you're right, particularly when it trades for 10, 15, 20 minutes in a 3 or 4 tick range. That makes you think, I don't like this, particularly if you're already short. If you're already in a move and you're not seeing something say, yes, you're right, yes, you're right, yes, you're right, it starts building doubt. Whereas if you start planning it beforehand and you start being, this is how it's likely to go, then you're not surprised by it, and you start looking at that more as a positive thing, that this is how it should do it. This is how it's going to progress lower, and this is how it's going to be a more sustainable drop. And it's just what we're seeing in the pound at the moment. I've got another little point that I wanted to have a little chat about in the pound, but once you got the break in the pound, you get the low volume just like the pund. Then it starts to build out a little bit lower, shift the VPOC down, and this is the phase where if you're not expecting the move, you start questioning it. You start going, well, it's not really doing much. This is on a 5-minute chart, and we've sat here for the best part of an hour going nowhere. We've got a little breakdown and a bounce back up. I don't like it. But that's quite typical on these sort of extended trend type moves. Now, yeah, of course, with this breakdown and reversal, you could be a little bit worried. But as long as you keep your stops above that current little range, it keeps you safe. It keeps you in the trade. Then you get the continuation. Then you get volume or a bit of more acceleration. You now got a new low volume down at 95 and volume accumulating down at the lows. This VPOC shifts down here, then again, that's giving you a new signal that potentially we could keep on going lower. Now, the one other thing I wanted to point out here is something the guys here have just been talking about. There's 980 lots bid at the low in cable. Now, that low is actually a level down at 128.80. If you go and have a look back, I can't remember the exact date, but it's going to take you quite a long way back in the pound. You've got this small little range, and the VPOC of that range is 28.80. So that's the point that potentially we could stall at. Now, with these large orders, what you've got to be thinking about is what exactly is the significance of it. The fact that it's not moved at all is suggesting that this is probably real. So that's the first thing you want to establish. It's traded now around about 350 lots into it. So you're very confident this is real. So think about what that means for people's trading. We've seen the best part of a 90, 100 tick drop here. If you're short on this, even if you're short the inside daybreak, you're now looking at this thinking, right, well, I'm 60 ticks on side. There's a large bid. Do I want to take some profit here? Chances are you will get some short-term profit take, and this is what bids the market back up a little bit. Now, from a longer-term perspective, if you are looking to keep hold of this, you've still got your stops above 95. But if you're looking to bank something, and this is, again, where that sort of planning as to what the market's going to do comes in. If you want to bank something here, getting out just above that 80 lot, it's on a level, it's where the large bid is, does seem quite reasonable. You're also going to get people try and front run that as well, particularly as soon as they realise it's real. So that creates this little bit of buying, and that now moves us into the next phase of potentially sideways. If the 980 gets filled, doesn't come back, and the selling continues, then this move can keep on going. But it's certainly at the moment a little area for a little bit of respite, and we'll now see how it plays out for the rest of the day. I wouldn't necessarily be thinking this has to go back higher. And until we go above 95s, I would still be thinking we come off to the downside. And it could be a case that whoever's sitting there with this 980, or whatever they've now got left, whoever's sitting there with that is probably just taking off a short position. Yeah, sit there, put their bid there, get filled, get filled, get filled, and that's it. If they were rushing to get into this trade or rushing to get out, they'd move that and chase the market with it. They're not fussed on that, so it's something that's likely to sit there until it's filled. So once it is filled, it's then a question of what the market does, and that should be the next bit that you're planning if you are already short, or if you're looking to get a new short on. If it breaks it and the selling keeps going, this should then keep on going. Yeah, you're going to have quite a few people getting longs just ahead of it, thinking, well, I've got a nice safe stop on this. Very true, they have. But as soon as it breaks, if nothing buys it back up, then it's going to keep going. The other side to think about is if it breaks and then comes back in, everyone who sells the break is likely to get out. So have that bit planned for when you get there. What are you going to do in each scenario? Are you going to sell through it, or are you going to wait and see if it gets bid back up?